As we have talked about at length, one of the Biden administration's big problems right now, the high price of gasoline. But what can Biden and company do about it? The various oil executives got a tongue lashing this week from Congress when they appeared there to testify. But, is that sort of counterproductive if they're trying to convince them to actually pump more? Rick Newman has been examining this very question. And so, Rick, what can Biden do in terms of sort of strong arming, persuading, I don't know what, these companies to pump more?
I've been asking people in the industry this question, and just asking producers to provide more oil and gas is not going to do it. I mean, they make these decisions based on economic factors and profitability estimates. So there are some things Biden probably could do if he wanted to. But the way to think about this, it's not like the oil and gas cops are standing out there saying, nope, nope, you can't drill here, you can't drill here. You have to really think about this through the investor channel. And this industry has actually lost a lot of money and in the last decade. And that means investors expect higher returns than they used to, and they want their money back sooner. And they think there's a lot of regulatory risk around this industry. So what the Biden administration could do is signal that maybe there's less regulatory risk than the investor community thinks. They could do things like approve export facilities faster, approve pipelines faster, remove some of these new requirements to take carbon costs and emission costs into account when approving pipelines. Undo the recent SEC proposal that all publicly traded firms have to do this elaborate carbon accounting. What this would do would signal to investors that maybe this investing in this industry is not as risky as they once thought. So maybe they'd be a little more comfortable putting some cash flow into new capacity instead of returning it to investors, and just make it add more confidence that there are going to be returns for investors down the road. Now, do I think Biden is going to do this? No, I don't, because obviously this conflicts with his plan to wean the whole economy off of carbon energy and transition to green energy. But if Biden wanted to do some things to incentivize more oil and gas production, he certainly could do it.
So it seems like then realistically, nothing is going to change. In other words, the dynamics affecting oil prices and therefore gasoline prices will be largely contingent on other stuff, namely what's going on in Russia, what happens in the Mideast, a potential Iran deal. Is that fair to say?
Yeah, but I think so. Two things are happening. One is that the business model in the oil and gas industry has changed. They overproduced and they added too much capacity during most of the last 10 years. And now they're just being a lot more cautious. So that part is different. But there still is some increased capacity. I mean, with oil prices at or above $100, there are some producers who are saying, hey, this is a great time to increase production. They tend to be privately owned companies that don't have to answer to shareholders the way Exxon or Chevron do, let's say. So there is an increase in the rig count. We are going to see some more production. And at the same time, we're also seeing what economists call demand destruction, which is when the cost of something gets so high as gasoline is right now, people use less of it. So these things probably will, assuming there's not going to be some giant shock relating to the Russian invasion of Ukraine. These things probably will bring prices down over time. But if you think about it, that's the very thing that oil and gas companies are trying to avoid. They are trying to avoid increasing production, which then leads to lower prices. And then their profitability goes down, and they kind of blew it with their investors once again. So some of the fundamentals are still in place here, and I think we could see lower prices, through the rest of the year. But we're not going to see, probably not going to see oil prices going back to $50 or $40.
Right. I think that the dividing line for these guys to make a lot more money was what, $80 a barrel? It might even be $60 a barrel. Either way, they're sitting pretty right now when it comes to those oil prices and how it flows through. Thanks so much. Really interesting stuff, Rick. And we're going to keep on top of this, of course, as well. Appreciate it.